my name is Emily and my mention number is 285531. Now I would like to present study on Top Glove Corporation Berhad in Malaysia and determine the relationship between its performance and its determinants. In July 2018, Top Glove's share price performance will remain weak mainly due to the legal action related to Avata Capital in Singapore. The legal action seeks to recover at least RM 714.86 million from Top Glove RM 1.37 billion acquisition at Spion. This led public investment bank Berhad to cut its earnings forecast for 2018 to 2020 as Spion's contribution was lower, with a net profit of just RM 7 million for the 2 months well below the annual target. Next, surge in demand for gloves triggered by COVID-19 led the company to achieve record revenue of RM 4.8 million in 2019. However, higher natural rubber price and intense competition led to a 13% decline in Top Glove's net profit in 2019. In addition, lower average selling price ASP due to intense competition from regional glove manufacturers also resulted in lower net profit for the company. In 2022, Top Glove reported a net loss of as much as RM 158 million and revenue also declined by almost 61% to RM 6.325 million. The company said this was mainly due to an imbalance between supply and demand for gloves as a result of delayed reordering activity by customers and a reduction in existing glove inventory. This research was motivated by the following research objectives. First is to identify internal or company-specific factors that may have an influence on the performance of Top Glove in Malaysia. Next is to determine the external or macroeconomic factors that may impact on the performance of Top Glove in Malaysia. And the last one is to research the internal and external factors that may influence the performance of Top Glove in Malaysia. There are also have 3 research questions of this study. First, is there any relationship between internal factors and performance of Top Glove in Malaysia? Second, is there a relationship between external factors and the performance of Top Glove? Third, is there any relationship between internal and external factors on Top Glove performance? The literature review is divided into 2 parts, which are internal and external issues, focusing on the areas of performance, liquidity risk, credit risk, operational risk, and market risk. The company's performance is a combination of both the financial and non-financial abilities. These factors can be used to determine growth potential and evaluate how effectively the company is carrying out its business strategy. Profitability is defined as the relationship between revenues and expenses and is an estimate of how profitable an organization is relative to its expenses. To measure profitability ratios are utilized, which include ROA and ROE. In this study, ROA used as the internal factor while ROE is the dependent variable. The internal factors used in this study are ROA, current ratio, quick ratio, average collection period, debt to income, operational ratio, and operating margin. Liquidity risk refers to the possibility that a company may not be able to pay its short-term debt without incurring large losses. Credit risk is the risk that may result in a loss to a creditor due to a borrower's failure to fulfill contractual obligation, which can arise from lending, trading, investing, on accounts, and payment and settlement of international securities transactions. Operational risk is described as a business risk of loss due to the deficiencies in internal processes, people or processes, or due to the external factors beyond control. Other than that, the external factors in this study are inflation rate, interest rate, exchange rate, GDP, and also unemployment. Market risk, also known as systemic risk, is defined as an exposure to losses on both on-balance sheet and off-balance sheet positions due to unfavorable change in market price. Sampling technique will use in this study. Sampling technique is a statistical method used to select a representative sample from the total population. The report sample for this study is Top Glove Corporation Berhad. To examine the relationship between Top Glove's performance and its determinants, the company's annual report data from 2018 to 2022 was chosen. Next, linear regression was also used as the method in this study, which is commonly referred to as ordinary least squares regression. This regression analysis is frequently used to determine how independent factors affect the dependent variables. Linear regression will be conducted by using SPSS version 27. By utilizing SPSS, this study considered the relationship between 3 independent variables and 1 dependent variable. Descriptive statistics were used to analyze and summarize the sample derived from the data analyzed that collected from Top Glove's annual report from 2018 to 2022. Based on the table, we can know that the average collection period of the company have the highest number of mean and standard deviation. The mean of average collection period is 46.6825. This shows that the approximate time takes by the company to collect its receivables are around 47 days. The standard deviation is 12.4676. It shows a high volatility in profit over 5-year period. It is critical for a company to track the success of developing an accounts receivable procedures in order to make sure they have adequate cash on hand to meet their financial obligations. Based on the correlations table, the most significant variable to ROE or financial performance of Top Glove is operational ratio because it got the p-value of 0.0140. A lower operational ratio is considered a positive indicator as it shows that a company is spending less than it earns. Other than that, there are some variables that not relevant to ROE or financial performance of Top Glove since the p-value is greater than 0.1, which are current ratio, quick ratio, operating margin, interest rate, inflation rate, exchange rate, and unemployment. By compare with all of the model summary, the model summary of external variable recorded the highest adjusted R-square. There are 3 variables contribute to Top Glove financial performance or ROE with an adjusted R-square of 0.999 or 99.9%, which are unemployment, GDP, and interest rate. This means that 99.9% of the variation in the profitability variable ROE can be explained by the unemployment, GDP, and interest rate. Moving on, by comparing all the ANOVA tables, the ANOVA for the external variable recorded a significant level for the ANOVA with a p-value of 0.018, which is less than the p-value of 0.05 set for the significance of the ANOVA. It significantly predicted that the outcome variable and several of the selected independent variables for the external factors such as unemployment, GDP, and interest rate could have an impact on Top Glove's ROE. For the external variable equation coefficients, the interest rate, GDP, and unemployment are positively significant to ROE with a p-value 0.015, 0.011, and 0.026 respectively. This indicates that any change in interest rate, GDP, and unemployment rate will have a moderate impact on the financial performance of Top Glove. In conclusion, when cross-checking the correlation table and the coefficient table, the results show that the GDP have a major impact on Top Glove's performance, and only objective 2 of this study was completed. This is because the results show that external factors do have an impact on Top Glove performance or ROE when examined in combination. Positive correlations suggest that improvements in these variables will have a positive impact on the company's overall performance. To achieve this optimization, the company should focus on strengthening its internal processes, including regular assessment and improvement of its business operations to ensure that its customers maintain a good credit standing and reduce the risk of default. Furthermore, external variables can also affect Top Glove's ROE. The company needs to keep a close watch on the government regulation affecting the healthcare market and understand the macroeconomic trends in order to adjust its business strategies in time to adapt to the changes in the external environment. The company may also communicate with industry associations on a regular basis, track changes in legislation, and participate in relevant forums to gain insight into macroeconomic trends.